When you file an insurance claim, what's the first thing that comes to mind? I'm guessing it's a mountain of paperwork, a bunch of phone calls, and just a whole lot of waiting. But what if a payout could be instant? I mean, completely automated, triggered by pure objective data the second an event happens. This isn't some sci-fi concept. This is parametric insurance, and it's being totally reimagined by blockchain technology.
It's a fair question, right? We live in a world where you can get almost anything with a single click. So why is insurance still so stuck in the past? Every single step, from filing the claim to assessing the damage, all the way to that final payout, is just filled with friction. It's a slow, expensive, and, let's be honest, often subjective process that just leaves everybody feeling pretty uncertain.
And all that friction? Well, it has a very real, very high cost. Just take a look at this breakdown. For every dollar you pay in premiums, only about 60 cents actually makes it into the pool to cover claims. A massive 40% gets eaten up by administrative overhead and, you guessed it, the costs of that slow, manual claims process. The system is just fundamentally inefficient.
To put it bluntly, the old way is broken. It's slow, it's expensive, and it's opaque. It's basically an analog process trying to keep up in a digital-first world.
This is exactly where parametric insurance changes the game. See, instead of assessing a loss after it happens, a parametric policy pays out automatically when a predefined objective event, a parameter, is met. So think of a specific wind speed during a hurricane, or a flight delay of more than 2 hours, or maybe a temperature drop below freezing in a citrus grove. It's all purely data-driven, which completely removes the need for any kind of subjective assessment.
What this does is introduce a whole new logic for insurance, one that's built from the ground up on automation and objective truth.
Our platform is really built on 3 core features that all work together. First, we get rid of manual claims processing completely. Second, everything is driven by real-time data triggers. And third, and this is crucial, it all plugs seamlessly into your existing systems through a simple API, so there's no need to rip and replace your current infrastructure. So what's the engine running all this automation? It's a piece of tech called a smart contract. You know, the best way to think about it is like a digital vending machine. The policy terms are programmed directly into code on a blockchain. When the right data is fed in, kind of like putting money into the machine, the contract automatically executes the payout. And because the code is transparent and can't be changed, it becomes the ultimate impartial judge for the policy. Okay, but you might be wondering, how does a digital contract actually know what's happening in the real world? That, right there, is the critical lift. That connection is made by something called an oracle. An oracle is really just a secure bridge that feeds external, real-world data to the smart contract. It could be a software oracle pulling from a trusted weather service API, or maybe a hardware oracle connected to an IoT sensor on a shipping container. Its whole job is to provide that objective, verifiable data needed to trigger the policy. The whole process becomes incredibly simple. It really just unfolds in 4 automated steps. 1. A predefined event happens, let's say a flight gets delayed. 2. A trusted oracle verifies that delay from an official data source. 3. The oracle sends that verified data to the smart contract. And 4. The contract instantly executes the payout. No forms, no phone calls, no waiting around. And when you put this new model right next to the old one, the advantages just become crystal clear. So let's actually put them side by side, the old model versus the new.
The difference is frankly night and day. Payout triggers go from subjective assessments to objective, hard data. Payout speed shrinks from months to minutes. All that paperwork, it's gone. And transparency shifts from a closed internal process to one that's fully verifiable on the blockchain, which makes manipulation basically impossible. This isn't just an incremental improvement. It's a fundamental transformation of how we manage risk.
All right, so what does this actually look like in practice? Well, this technology is already being deployed across a whole bunch of industries. Agriculture is a perfect example. A farmer can take out a policy where a payout is automatically triggered if rainfall in their region drops below a certain level for a few weeks, or if an unexpected frost is reported by a trusted weather oracle. They get the capital they need to survive a bad season right when they need it most, without ever having to go through a long claims process. And these applications stretch all across the enterprise. Just think about it. Automated payouts for flight delays. Instant claims in a supply chain the moment an IoT sensor detects a temperature breach. In renewable energy, a policy can pay out automatically when low wind or sun causes an energy shortfall. This tech isn't just making old products better, it's creating entirely new ways to manage risk. So this new model of insurance, it isn't some distant vision. It's here today, and it offers a fundamentally better way to manage risk.
I think the key thing to take away is this. The technology to fully automate claims processing is no longer experimental. It's tested, it's secure, and it's absolutely ready to be deployed at an enterprise scale.
The question for the industry is really no longer if insurance will become automated, but how quickly. If you're interested in seeing how this can be applied to your own business, you can explore a live demo or learn more about our pilot programs. The future of insurance is being built on data and automation, and it's happening right now.